Managing Director and CEO of Peninsula Energy. I'd like to share with you briefly the information about Peninsula Energy, a U.S.-focused uranium production company with a clear pathway to production. As ordinary, we have a disclaimer and competent person statement, which we'd ask you to review, along with a cautionary statement with respect to use of inferred resources. Uranium stocks today are heating up. There's a compelling amount of sector catalysts. We have strong long-term demand fundamentals for nuclear energy, which are driving the uranium stock market today. We have continued underproduction of uranium, which has been a trend over the last several years, which has been expedited by COVID-19 and significant mine shutdowns during the COVID-19 pandemic period. We have long lead times to the restart of mines and much longer for new mines. Peninsula is in the situation of restarting an existing mine and has an opportunity to be a first actor in restarting uranium production at our Lance facilities. Utilities are continuing to return towards long-term contracting after a very prolonged hiatus, and that's compelling to move the market forward for uranium producers. And for Peninsula, it's really important to understand that we have a renewed U.S. government emphasis on domestic mining to meet the raw material needs of a clean energy economy. Peninsula Energy's Lance project is U.S.-based and has the opportunity to participate in these U.S. government funded and supported programs. So Peninsula today is a restart-ready uranium producer. Peninsula is led by a highly experienced and technically sound board and management team. We think after making a final investment decision, we can be back in production within 6 months at our Lance project. We're funded for our current plans and future activities with an established uranium contract book which generates significant long-term revenues. I'll present more on that, and you'll see how that sets us apart from our peers in the space. Our flagship Lance project is located in the state of Wyoming in the United States and is the only U.S.-based uranium project authorized to use the industry-leading low-cost, low-pH in-situ recovery process. Another point that really separates us from our peers. We have extremely low capital requirements for the restart of the Lance project, and a field demonstration is currently underway with respect to the low pH initiative and transition so that we can optimize our efforts when we move forward with the low pH at production at the Lance site. We have the U.S. specific producer opportunities in the uranium market, which also set us apart from our Australian stock exchange traded peers. Corporately, we have 890 million shares on issue. We were trading most recently at about 10 cents per share, and our market cap is near $100 million. We have no debt, and we have a cash on hand, usable cash of $8.4 million. That'll carry us a long way as we have revenues also in the order of $8 million expected net in this year, 2021. We've recently had a couple of opportunities to increase the liquidity of our share trading. We've been included now in the Global X Uranium ETF, and the composition from February of this year moving forward has Global X purchasing shares. Most recently, I've seen that URA, the Global X Fund, has acquired over 17 million shares of PEN and has net assets of over $400 million. So while the URA fund is growing, they continue to acquire long-term shares of Peninsula. We're also recently introduced to trading on the OTC QB markets in the United States under the symbol PENMF, PENMF. This has significantly increased our share volumes trading in the United States and the opportunity for U.S. retail investors to participate in our story. The Lance project is the main focus of this presentation, and I'll share with you a couple of the highlights, as this is meant to be just a brief introduction. Lance is one of the largest U.S. uranium projects in size and scale. We have over 54 million pounds of compliant resource base. We're licensed to produce up to 3 million pounds a year, but constructed currently for a 1.15 million pound per year production rate. We have very modern processing facilities. The wellfield facilities at Lance and the plant facilities at Lance were built in 2015 and 2016 timeframe. And our production today is paused because of the uranium markets. We estimate a 6-month lead time to return to production following a restart decision. And that restart decision really depends on the sustained improvements of the uranium market and satisfactory progression of our current low pH optimization activities, which include the field demonstration. Why are we transitioning from one chemistry to another to the low pH? Because 57% of the global uranium produced in 2019 was produced by the low pH in-situ recovery method, and that method generates the lowest quartile cash costs for any uranium mine in the world. Lance is the only U.S.-based uranium project authorized to use this low pH in-situ recovery method, and that sets us apart. The feasibility study suggests a transition costs from going from the alkaline, where the project was built, to the low pH chemistry is about $6 million. And to ramp up our capacity to the full 1.15 million pounds per year, we need to add some additional wellfield installations, and we need working capital of an additional $15 million. Our all-in sustaining costs when we're producing around 1 million pounds a year is estimated to be about $41 a pound. And for Lance, the real opportunity is to move to stage 2 and expand and double our capacity. That drops our all-in sustaining costs by 25%, taking it to about $31 a pound. And our capital requirement to do so is about $43 million. Today, we're running a field demonstration. We think we'll be running that project for 18 to 24 months, as it's a full-scale commercial set of patterns. We're maintaining about 75 gallons a minute of production rate out of those patterns. Acidification of the patterns is nearing completion. This test is to check alternatives for oxidants in our chemistry process, to test solids management, which is running very well to date, and to pilot ion exchange opportunities and units for which we recover the uranium from our production streams. We have a well-defined pathway to production. We're doing the technical optimization field demonstration studies today. We're seeking further offtake agreements, and when those two pieces come together, we'll make a final investment decision. Within 6 months, we can install the transition facilities and have our old uranium project areas up and running again, producing uranium. Within about 12 months, we can develop new uranium well fields production areas and have those up and running in the low pH scenario. So it's a very simple, well-defined pathway, easy to execute and easy to understand. One of the things that Peninsula has that sets us apart from our peer groups is an established uranium sales contract book. We're the only junior uranium producer with a long-term sales contract book that extends out to the year 2030. It represents about 15% of the projected life of mine production from the Lance projects, but it's a significant contract book holding about 5.5 million pounds of committed sales into contracts which are priced in the $51 to $53 per pound price range, which is significantly higher than the $30 spot price range that we see today in the uranium markets. In the fourth quarter of 20, we sent 75,000 pounds to customers and generated $1.4 million net cash margin for the company. In the coming years, 2021 and 2022, we are set to deliver on the order of 450,000 pounds. In 2021, we're not producing, and therefore we're acquiring materials from the market. We've secured those materials at fixed price binding contracts, and we expect to net between $6 and $8 million on our uranium transactions this year. That's a net revenue. This book supports this company throughout the year. In the uranium energy markets, the key drivers, as I've spoke about, is the U.S. domestic uranium reserve, where the U.S. government is securing critical supplies from the supply chain. We're looking at purchasing U.S. produced uranium from U.S. producers like Peninsula. They have a $75 million budget for fiscal year 2021 allocated to the purchase of uranium from U.S. producers. The U.S. government has also supported U.S. uranium producers in another big way and opens opportunities for U.S. uranium producers. What does it mean for Peninsula? It means Peninsula is the only ASX-listed uranium company that has immediate ability to take advantage of these U.S. government programs that support uranium mines in the United States. The other key drivers for the, so we're coming to the end of this presentation. What I've shared with you, I think, is a compelling investment proposition. Peninsula has a low capital requirement of only $6 million and a short time frame of only 6 months to put our Lance project back into production. We're transitioning that project to an in-situ recovery method that has proven to be low cost throughout the world wherever it's operated. The Lance project is at a competitive advantage in the United States now because we're the only ones licensed to use this low pH in-situ recovery method in the U.S. Our demonstration, the Mine Unit 1A, is well underway and will provide near-term catalysts for the company moving forward. We have ongoing cash flows underpinned by our established uranium contract book, which sets us apart from our peers. And we have a positive outlook for the U.S. domestic sector through government-backed uranium purchasing programs. So not only can we access the standard uranium market, but we have special opportunities here in the United States. Furthermore, the company has added U.S. investor market access through the OTC markets in recent months to increase our share liquidity. So that's a quick summary of Peninsula Energy. I'd look forward to the opportunity to meet with you and speak with you at the APAC one-to-one mining conference here this March. Thank you.